All right, so let's break down one of the biggest trades I took last year, and I remember this trade specifically because it was literally almost Christmas, a few days later, and it was one of the trades I took literally right before. Everything was 2 days before Christmas. It was on a Thursday, if I remember correctly. But yeah, I'm gonna break it down. It was really good. I made a lot of money off of this. It was like so I have this account where I say basically I want to break down. I want to make Christmas money. There's like a Christmas money account. So I do have money, of course, I'm going to be spending and whatnot. But sometimes when I just want to go overboard with Christmas, I say, let me be financially smart and just trade for that money. So this was the trade that made a killing for me on Christmas last year. It's also part of the reason I bought the Lamborghini, because it was also my Lamborghini fund as well, because I ended up buying the Lamborghini in February the following year. So let's just get into it. So real simple, real easy, real quick. Okay, so basically we were trending downwards. Of course, we had that major fallout at the top. So this is what I was looking at. All right, I was like, okay, we had a major fallout, price dipped, we had a lower high, and all they did was just keep dropping, kind of coming up, but kind of arcing as well. So I kind of did, predict something like this. That's exactly what I predicted, and the reason I predicted this was because number one, we had been falling for some time. However, I didn't expect price to just rise immediately, right? The reason for this was because, of course, it had hit another area of resistance, a major area of resistance, and price did end up turning. So I decided, you know what, maybe I am going to just short a position here because we are trending downwards, we are falling a little bit, and I do think we are going to drop a little bit before going upwards. And of course, if you guys know anything about trading the gap, so another thing about trading the gap is that basically when trading the gap, when the market leaves a gap like this, the market always has to close a gap. Whether it closes the gap today or in a couple of months, you will always just kind of know whether or not it's going to close the gap based upon what the price is telling you, where price is at, its movement and its behavior. So I did see the gap had been open over there, and price was falling, and it was kind of bad time for US 30 around the time. It was kind of bad for Wall Street at the time, so I was just like, okay. Dow Jones wasn't doing pretty good, so I was like, okay, everything's kind of falling right now. Investors are losing confidence. All this is pretty crazy, it's pretty hectic. So the reason I was going to take my sells as well is because the bears were dominating the market for sure. They were dominating the market for sure. So I was like, I definitely want to short a position here. But if I see an opportunity to buy, I still will. So what did happen is, this is around the time I did catch it. I decided, let me mark up my support and resistance lines and just see what is actually happening with this particular trading time. So I did come over here, I marked it up, right? I came over here and I marked it up as well. And I came down, I marked it up over here. As you guys can clearly see, we are marking up on our resistance zones, those areas where prices touch repeatedly. Came in, I marked it up over here, and that did nothing below. So now it was just up to me to determine whether or not we were gonna buy or sell. So then, of course, I did what I do best. I dropped to the M15 looking for a point of entry. So when I did come to the M15, I noticed something very interesting. I noticed that price was at an area of resistance that it did reject off of, right? I noticed that it breached through this area of resistance. It came back to retest, and it came back to retest it again. So my whole thing was basically saying that, okay, if that's the case of what is actually happening, so my whole take on this was basically saying, okay, if that's what's happening, the price is rejecting off of this particular level, and the market is selling, it did bounce off this area of resistance, and it breached, but it's retesting and not necessarily breaking. I was going to wait for momentum, right? And remember, we did mark this zone up on the H1. So what you can do is basically this. If you're uncertain still with your analysis, what you can do is then wait for momentum, right? So waiting for momentum would basically be this. So we're seeing all these rejections, we're seeing the fall, we're seeing price respecting this area, breaching below a significant area of support, which is now resistance, breaching on the M5. So we're seeing it breach, and it's touching, it's retesting, and nothing happening. What we can do then is basically, what you could do is then, if you're still uncertain and you're still a little worried and you're worried about drawdown, is then of course try to catch momentum, right? Definitely try to catch momentum of this particular trade. And you catch the momentum based upon basically because the fact that of course, price is rejected, it's rejected, and if it continues to come down and it breaches this level here, it would have not only breached the level on the M5 but also breached the level on the H1. Therefore, if prices does close below, it will continue on downward to about this level, and hopefully coming down to this level as well, right? So that's what we're basically looking for. And of course, as price goes down, I think I cannot stress this enough. As price goes down and you're starting to make good profit, there has to be a point when you kill your SL, especially being a beginner trader. There has to be a point when the SL is no longer in the picture. SL is either an entry or in profit, and you're securing profits as you go along, right? That's just what has to happen as a beginner trader. This helps with your mental state because you're securing and you're seeing a lot more blues. You may not see $5,000 at the end of the trade like you wanted to, but you are seeing $3,500, you understand, and not seeing red. So as a beginner trader, I recommend, you keep trading and trading and trading, and as you get more pro and understand the markets better, then of course you can leave your SL if you're comfortable, if your account allows it, and so on and so forth. So that's what you could do, but let me tell you what I did, right? So coming back down, now I just saw the M5, and these areas I'm basically marking up are basically just areas where I deem price could reject or just pull back or just give me a little bit of stress. Nothing too crazy, but the overall price is telling me that it wants to sell, right? I told you we had that spike above, we had the fall, price was going down. It just did try to pick up a little bit, but it was a bad time. Like I'm saying, the economic state wasn't looking really good, an impending recession. So that's why I was trying to short. These are the factors that I did look at. And as a Forex trader, you have to look at all these factors. You can't just get into the markets every day and not know anything about anything that's going on and think you're just going to click buy and then win. You have to know just a bit of background on everything that's happening. All right, so now let's get into it again. All right, so what happened is I then came over and said I was going to wait for the candlestick to come and close at this level, right? Just below this level, because if it does reject off of this one more time, I would assume it's going down. I was going to keep my SL pretty safe, and then we were going to see what's going to happen. So I did enter my trade over here. If a candlestick would have come down, my SL right over there, because I wanted to give it a little room to breathe, and my TP all the way down here. So remember, this was of course a trade I was trying to make a lot of money on, and I did see a perfect circumstance for this because it did go up, but it slowed momentum, so I could see a definite downfall to the downside, especially since we had been selling for a long time. The overall trend is downward, and of course this is just picking up just a little bit, but definitely it's gonna sell a little bit, right? And I'm just letting you know off of what I looked at that particular point in time. There's still other methods that you can use to get it very clear for you, but this is what I looked at. So my point of entry was going to be off a strong candlestick going downward. So it was on this candlestick that I did enter my trade. So as you can clearly see while it's still playing out, you see how it respected the area on the H1, right? It didn't necessarily come to touch any of those areas on the M5, which is particularly fine. That's why we have prices marked on the H1. It did break below that area, but as you can clearly see, it still respected it. Not respected that area on the M5, still came in, respected this area on the H1, and then still did what it did. Now let's go to the H1 just to basically show you why it's important to always mark up your charts mainly on the H1, and then of course look for entries based upon what's happening on the M5. So as you can clearly see, at this point we were in deep blue. It didn't hit the last TP, which is totally fine, because at this point in time around here I had secured a lot of profit and I just let a couple of my positions run. When I saw the reversal candlestick, I got out around here, but I made a lot of money off of it. So I just wanted you guys to note something as well. Do you see how it still touches and respects the area in the M5? Not all the time, but if you have these areas in place and you do acknowledge them, you will see price start to basically play around the area, obey it, reject off of it. Look, you see, if we just pause this for a second, it's that area we marked before. Price did come, shoot up, went back down, and did what it did, right? But of course, we're not going to look off the M5 and determine the whole outlook of what's going to happen with the trading, with the Forex market. We're going to look at the H1. This is just purely for entries. M5 I use purely for entries, not to determine the overall fact of what's happening in the Forex market. And as you can clearly see, this is what it looks like on the H1. So that was my point of entry, and if I look at the H1, you're going to see that strong candlestick going down, but the M5 showed me a better point of entry, so I entered a whole lot sooner, catching a couple more pips, because I entered when the candlestick was, the body of it was literally this big, right? But if I had just used the H1 for confirmation, I probably would have entered when the body was about this big, you know, representing a lot of momentum from the sellers, right? But because I entered on the M5, I was able to determine basically that it was going to continue selling, because the M5 I had seen the confirmations of a potential sell. And as you can see, it did come down, and do you see how it respected this level? So if you had come out on your H1 and seen that it had respected your previous levels, you would have been able to what? Trade better. But as you can clearly see, this is what price did. This is exactly what price did. So mark up your areas on your H1. Will show you the overall like spike points, touch points of your support and resistance, and then of course use the M5 for entries. And that's basically how I was able to take a very big trade on it. I forgot how much I made though on this particular trade. If I do remember, I will of course have it on the screen somewhere. But yeah, that's basically it. I hope you guys enjoyed everything. I hope you guys are learning from this. Make sure you guys watch the videos over and over again so you guys get the knowledge, you know, planted in your head. And I will catch you guys in the next videos. Peace.